And yeah, love to hear where everybody's calling in from. The presentation today is for Australian businesses, so I'm not expecting that we'll have our typical international audience. Often we've got people coming in from all different time zones, US, Asia, Europe, but I'm predicting that today's audience will be a bit more Australia specific, particularly as many of our Australians aren't traveling as much. And Erik, where are you? Well, I know where you're based, but the audience may not.
I'm based in Brisbane, Meryl.
Yeah. Not far. I'm down the road from you on the Gold Coast.
Yes.
And how are things looking in Brisbane at the moment in terms of, I heard that there's some more restrictions related to coronavirus.
We haven't felt it so much. I'm on the north side of the river, so we've probably sheltered a little bit. The incidents that have been reported have been on the south side, so they're probably feeling it a bit more than what we are on the north side of the river.
Yeah. So we've got a few more people joining in. Make sure to pop into the chat, which you can see on the right-hand side, and just say hello and let us know where you are today. We've got a couple of Queenslanders, a few people from Sydney, New South Wales. Yeah, they've blocked the borders. Yep, that's right. Yep, Victoria from Adelaide, welcome. Oh, great. So we have Lauren. So we do have some people that are calling in from outside of Australia. So calling in from Korea. Yes, Sydney-based business. Yeah, your name is familiar, Lauren. Welcome. Well, we'll just give it another minute or two and then we'll jump into it. Yes, Victoria, so we'll be taking a recording. So anyone that has registered for the webinar will also get an email afterwards with the recording link. And it is also possible to access the recording down the track as well. But it's definitely something that you may need to come back and watch too if particular questions about the grant arise as you're working through things like end of financial year. Great. So we're going to jump into it. I'm sure there'll be others joining in as we work on through. Welcome, Luke, too. Let's start with a poll. The poll, if you scroll down below where you can see my face and Erik's face, you'll see the poll option, and we're trying to get a sense of who's in the room today. So let us know what kind of business you are in. A little bit about Beanages. I think many of you have been to some of our webinars before, so I'll keep this brief. I'm Meryl from Beanages, one of the original founders. We've been going for over 5 years now, and our core focus is helping 6- and 7-figure e-commerce businesses and digital agencies with bookkeeping, financial reporting, and we're also really interested in educating our clients, and we do that through things like Profit First consulting, coaching, and we also have some online courses. So today we're really here to talk about the Export Marketing Development Grant, and I wanted to welcome Erik Anderson. Thanks for coming today, Erik.
Thanks, Meryl.
And Erik is originally an accountant, and he's been specialising in grants for many years now, 18 years, helping small and medium-sized businesses with various Australian government grants, including the Export Marketing Development Grant, which is what we're focusing on today. Make sure to stick around until the end, and as usual, we have a gift that is really there to help with your business. Now, as I mentioned, we have a poll that some of you have answered. If you do have questions, some of you have been interacting in the chat, which is great. There's actually also a particular question area. If you scroll down, it's just to the left of the polls option. And so if you have questions for Erik, questions about the grant, that's the best place to post them so that we can either reply directly there, or I can read these questions out for Erik so that he can answer them during the presentation. So I'm going to hand across to Erik now, and Erik will share his slides. And Erik, while you're doing that, I'm just going to read out or go through some of the answers to the polls. We have a couple in the consultant coach space, e-commerce, and also services. So good to see a good mix of different businesses. And I actually wanted to start with that question for Erik. Erik, who do you typically see as beneficiaries of the Export Marketing Development Grant? When I think of an exporter, traditionally I'm thinking of a bricks and mortar type business who are exporting physical products outside of Australia, but things may be different to that now. So who do you typically see receiving this grant?
So when I started 18 years ago, Meryl, almost all of my clients were bricks and mortar manufacturers, people who put their finished products into containers, shipped them overseas. And the export grant was started about 45 years ago to help Australian-based businesses go and take those products and market them into the US, Europe, around the world. And because we're so far away from the rest of the world, it made sense to try and give exporters some help in letting them go to trade shows, to go knock on doors and that. 18 years later, the internet has changed the world, it's changed our industry, and probably at the moment, about 70% of my clients would be what I would be calling digital exporters, i.e. they either provide services online, courses, or sell software products online, and that's changed the whole nature of who an exporter is. And really, fundamentally, if you are receiving money from an overseas client for services, products, or anything like that, you are an exporter. And that's probably the best way to describe that, to answer your question, Meryl.
I think you've summed that up perfectly. And Bean Ninjas ourselves, I never thought of us as exporters,
yes,
but we had a few US-based clients, and then all of a sudden we were recipients of this grant, and that client base started to grow. So service businesses can definitely be exporters as well, even though you might not typically think of that. So I'll throw it over to you now, Erik, and we can dive in.
Thanks, Meryl. So just to go back, sorry, and the slide is out of order. What I want to try and cover today is to give you a sense of you're eligible for the export grant. Are your products and services eligible for the export grant? Then probably the most interesting one is what export expenses can you claim for and how much can you get back? So just slides are just out of a bit of order. So the Export Market Development Grant, or more commonly known as the EMDG program, is administered by Austrade. So that's Australian Trade Commission. Sometimes people get confused. AusIndustry tends to look at other grants like the R&D Tax Incentive and Accelerating Commercialisation. This export grant is administered by Austrade. Other grants, you may need to be a company or be structured in some way. With the export grant, you only need to have an ABN. So you can be a sole trader or a trust in your corporate structure, and you will be eligible for the export grant. It is a reimbursive program, so you have to have spent money first, and then you get some back. And you have to spend, in any one application year, you have to spend at least $15,000 in eligible expenditure. The minimum grant is $5,000. And quickly to work out, show you how that works. If you spend $15,000, you take off $5,000. The government wants you to spend the first $5,000 yourself and not reclaim that. So then you're left with $10,000 and you get 50 cents on the dollar back. 50% of $10,000 is $5,000. So that's the minimum grant. The maximum grant is $150,000. You spend $305,000 or more, less than $5,000, and you get back to $300,000 and you get 50%. So the maximum grant that you can get in any one application is $150,000. You've got a major problem if your turnover is over 50 million because you can no longer get any money out of the export grant. There are people who think that's still too high, but the government is there to try and help as many of businesses to try and get exports. There's a limit of 8 applications. The first year you can put 2 years together, so you can effectively claim for 9 years, 2 years in the first and then another 7. They don't have to be consecutive, so you can miss a year if for some reason you haven't spent enough money or you've decided to consolidate in the local market. And in your first 2 applications, you don't have to show any export revenue. Now, if you do have export revenue, that's a bonus, no problems with that. But the government, Austrade, says, we'll allow you to go and test the market, see if there is a market for you in the first 2 years. No requirement to have export revenue, but from your 3rd application, you do need to have export revenue. So what products are eligible? The products have to be Australian designed or made. That's fairly obvious. However, about 10 years ago, the rules were changed to allow for products to be made, for example, in China, as long as they are designed in Australia. So you can either have drawings, intellectual property, patents, or anything like around your product. As long as the product is developed here in Australia, it can be made outside of Australia, and there is a separate form to be filled in when you do an application. Online products, services, as long as the idea or the product is developed here in Australia, they can also be sold overseas and qualify as export. Sometimes what happens is that you may have some of the services performed overseas. So, for example, if you're a digital agency, you may have people working overseas who actually do the work of putting the products together for the clients. There is a slight complication with those applications, which I'm not going to go into here. I'm happy to talk to anybody outside of this webinar, but that's something to just bear in mind. And then for a lot of other companies like biotech companies, you may develop the product here, have all the licenses and you're selling the license or the intellectual property overseas, and those are also eligible products. So as I mentioned earlier on, the first application you can put 2 years together. So currently we are working on applications that may have had expenditure, if they're a first-time applicant, in 2018-19 and 2019-20. So the export grant promotional activities that are covered are where you go and seek out, create demand for, or develop an export market for your product. That can be done in a number of areas. It can be done online. Increasingly, it's online, where you might do advertising via Facebook or Google Ads or something like that to see if people are interested in your product. It can be going to trade shows or conferences where you have a booth and you explain to people what your product does, what you do. Or you could just travel overseas, typically to the US, and just go and knock on doors and try and find distributors for your particular product. A key part that always seems to come up with a couple of applicants every year is you have to be the principal in the export transaction. So, for example, something that comes up fairly regularly is somebody who wants to export wine from Australia. They may have a restaurant a restaurant or a group or a chain in an overseas country that they know would be interested in the product. They may go and negotiate a transaction with the winery. The winery sends it direct to the overseas client, and the Australian company that's contacted me gets a 10% commission on that particular transaction. They are not the principal in the export transaction, so they cannot claim the export grant for their expenses to go and try and generate that business. Key thing to bear in mind, for most people who are selling online, you're transacting directly with the buyer, so that shouldn't be an issue. You have to, excuse me, you have to have paid for the expense during the financial year. Austrade works on the cash basis, not on the accrual basis. So transactions that need to be claimed have to have actually been paid during that financial year. The other thing is that often comes up is somebody else may have paid for expenses legitimately, but it isn't taken up in the applicant's profit and loss. We can't claim those expenses. So just make sure that the accounting side is correctly accounted for. And then obviously you have to have evidence of the expense and what it was incurred for. Typically that's just the invoices, bank statements, or anything like that. So there are 8 categories that you can claim expenses under, and I'll run into a bit more detail in the next couple of slides, but just overview: the overseas representative, marketing consultant, marketing visits, free samples, trade shows, advertising and promotion, overseas buyers, and patents and trademarks. Patrick, I'll answer the question shortly about the US patent. So overseas representatives are those people or businesses that are based outside of Australia who are promoting your products. And typically they would be either based in the US, the UK, can be China, can be anywhere, but they are promoting your products directly to third parties to try and market your product. They can be employees, they can be third-party contractors, they can be external businesses. As long as there's a long-term relationship with that particular person that's doing that. The portion of the fees that you can claim must relate to the marketing. So, for example, there are people who may have one person based overseas who does both marketing and then looks after the warehousing, follows up on accounts, does the admin. When we look at what they have done, we will try and allocate a percentage to the particular fees that we are paying them, either via retainer or a monthly fee, and then say that 40% of their work relates to marketing, 60% is non-marketing. As you can see from the screen, on those particular activities, then we will claim only 40% of their fees. And then at the end of the day, when we do the application, Austrade will then pay back effectively 50% of that 40%. So as you can see, it's capped at $200,000. So if in that example that I said, let's say we spend $200,000, which can cover the office, salaries, car hire, travel, everything to do with that person promoting your products outside of Australia. 40% of that relates to marketing. We would be claiming $80,000, and Australia would then pay us $40,000 back out of that transaction. Interesting thing, you need to make sure that in your agreement with whoever that third party is based outside of Australia, marketing your products, that you cannot claim a commission as part of the export grant. You can only claim a retainer or where you have been at risk, so you've paid somebody without any certainty of getting anything back. Marketing consultant is more of a short-term exercise. So this is somebody who's doing export research or specific marketing activities, running your Facebook campaign or something like that. Those type of expenses are claimed under marketing consultant, and this category is capped at $50,000 per application. Probably the area that has always been one of the biggest expense categories is marketing visits. So this is a cost where, or the expense where you go over to the US, go and knock on doors, go to trade shows, and you can claim the cost of the airfares, and departure taxes, not visa or insurance, are no longer allowed. And then instead of having to give hotel accommodation, food or meals or taxis or anything like that, Austrade allows you a per diem of $350 per day. So you don't have to claim any hotel. It's just automatic from when you left Australia to when you came back. You get $350 per day. You put that into the calculation, effectively you'll get back $175.
I might just add a quick comment there. That was something that I've seen confused before, where the actual costs were tracked And I'll come at this quickly from a bookkeeping perspective. Just because you can claim the allowance doesn't mean you don't need to keep records for other reasons, like claiming GST or for your BAS and management accounts. I guess typically if you're overseas, GST may not apply, but I wanted to throw that in. So still keep accurate records of the costs that you're incurring overseas, but it's actually an allowance rather than exactly what you spend. And that's something that I've learned a lesson there myself from one of our earlier applications.
Yeah. The other interesting thing is to know that this is limited to 21 days per trip, the $350. So you can travel for longer periods, obviously, or shorter, but after 21 days, the $350 per day cannot be claimed. And I've got a very interesting story of a small company that started off in Brisbane. I sat down with them, I explained this, and one of the guys from the company flew over and spent about 3 months couch surfing across the US, going and promoting their products. And he came back and he said, 3 months is 90 days at 350. This was great. And he had been couch surfing and it didn't work. And I said, you forgot that I told you that it stops at 21 days. So he had come back, so that he had spent Christmas and New Year in the States, and I told him that we can't claim Christmas and New Year because obviously there's nobody marketing, so we had to apportion from that. And then I explained to him the 21 days. So for the rest of the 6 months, so I had the conversation with him early in January. What he did, and obviously the US was a big market for them, what he did is he would fly over for 21 days, come back on day 21 from the US, spend a couple of days in Brisbane, and then fly back to the US to restart the 21 days. And I'll never forget the one trip. He flew in at 6 o'clock in the morning, went home, showered, and then caught after the evening flight back to the US.
That's commitment to the cause too.
Yeah, and he was just saying he was couch surfing in those days. I mean, you could go onto the website and find somebody's couch, and $350 a day for them at that stage was a lot of money. So it made sense to do that. Sometimes it does happen that you may tack on a couple of days holiday at the end. No problem with that. We just have to apportion the travel. And obviously the 21 days the $350 per day doesn't count for that holiday period. Free samples is something that also is interesting, where people will send their products overseas to influencers or potential buyers. You can claim the manufactured cost of the sample. So this is obviously if you've got a product, plus the postage and freight costs. And it's capped at $15,000 for this category. I had a client who was selling organic beef overseas, and what they would do is they would send a kilogram of beef. The beef itself was, would probably cost $10, but the cost of putting it into a refrigerated box to send it to a client would sometimes be, $500 to $1,000, and that ended up being a very good avenue sorts of marketing for them to send products overseas and then claim the cost in this category. Trade shows at the moment, obviously there's not much happening in this, but this is another big area. So this is where you may take a booth at a conference or a trade show. The cost of having the booth put up, the entry fees, and all those costs can be claimed in this category. Sometimes there are other ancillary costs that come in, putting furniture, hiring TVs. All of those costs can be claimed in this particular category. I had a client once who was doing in the software industry. He decided to go over to Dreamforce, which is the Salesforce trade show conference. He paid $250,000 for that whole exercise. The cost of being at the conference plus having a very, very fancy conference facility. $250,000 quickly, US dollars quickly equated to over 300,000. And in that particular application, we only had one line in that whole when it came to the expenses. And that was a Dreamforce cost. So Yes, so some people do spend a lot of money on trade shows. This category has changed totally since in the period that I've been doing the export grants. So this advertising and promotion covers the cost of brochures. Very few people do brochures anymore. Videos and DVDs, the cost of filming, putting that together used to be, a fairly large expense. But advertising, online advertising, Google and Facebook has just changed this category totally. And people will spend hundreds of thousands of dollars on Google and Facebook and are eligible to claim it under this category. It is capped at 300,000. So, if you're spending more than 300,000, that's a business decision on whether it works for you or not, but just something to bear in mind. I've got a client on the Gold Coast who sells a $3 app, nothing much, impulsive buy. When I first started working with him, he spent $20,000 on Facebook advertising. He was over the moon that he got back 10,000. He thought this was great. Next year, when I went and saw him, he had spent $200,000 on Facebook advertising, and he got back $100,000. In the last 3 years that I've been doing his applications, he's now spending over $500,000 on Facebook advertising. As I said to him, never spend a dollar to get 50 cents back. But what he was able to do was to generate $3, $4, $5 for every dollar that he spent on Facebook. So it obviously makes sense. And then, he gets some of it back from the export grant. So it's a bonus for him at the end of the day.
I think this is a key area for particularly this audience. And I know a lot of the B-Ninjas clients, we've got a big category of e-commerce businesses, and many of them sell, or their sales method is pay-per-click, whether it's Google or Facebook. And so I think this will be particularly relevant and advantageous for those businesses. And I know that many of our clients and our audience are also interested in things like content marketing.
Yes.
Is that captured in this category, or is that it? So things like writing content, doing SEO, or paying an SEO agency, would that fit here, or is that in a different category?
Yeah, so two things there, Meryl. One is that you have to be paying somebody outside the business. So the last line, internal costs such as wages of staff. And sometimes you may have a dedicated person in-house who's writing that content or doing that work. If they don't meet the 80-20 rule with Austrade, with the ATO, they will not be able to be claimed. If they're on a regular basis, they might come under the marketing consultant, i.e. they're performing work for you. If it's one-off type of thing, it might be able to be claimed in here. But to answer your other question is, yes, content marketing, the cost of that is covered under, potentially under this one or the marketing consultants category.
I can think of another, I don't know if it's a common question, but it's something that I would think about. Many of the businesses we work with are selling to Australian and overseas customers. So how do you figure out, well, what gets a portion? What portion of this was for it to attract export sales?
Yes. So there's a couple of ways that we would look at trying to work out a percentage. It can be looking at Google Analytics to see what percentage of hits on your website are from Australia and New Zealand. New Zealand is not counted as an export country, so we have to lump them in with Australia and then the rest of the world. Or Facebook and Google actually give you spend by country. So then we would use those reports, or have a look at the percentage of international sales compared to your domestic and New Zealand sales and try and work out a percentage on that. So there's various ways to look at it. Obviously, we're looking at marketing. So we would look at the ones that are most favorable. Sales is a lag indicator in terms of trying to work this, because obviously that's already happened. So we try and look for the most favorable one where it makes sense to try and get the best return at the end of the day for the spend, advertising spend. Overseas buyers is not a big category anymore, but this is where you might pay for somebody to come and visit your factory or have a look at it. So the cost of those expenses can be included in the application. And then, Patrick, you had a question about patent costs. Yes, the costs of patents and trademarks can be claimed under this category. It is capped at $50,000 per application. The other key thing to bear in mind is your application cannot be only patents and trademarks. So sometimes you may have an early stage company who's spent a fair amount of money on patents, but they haven't developed their technology or been ready in a place to go and license it or sell it. An application with only patents and trademarks will not be an eligible application. You have to have made an attempt to go and promote and market your product or services IP through one of the other ones. And that can be as simple as just running a website or a couple of Facebook ads, Google ads, or something like that. Key thing to bear in mind. Meryl asked me a question earlier on before we went live. Some expenses, you may incur some expenses before you have a product ready to market. You may be going to do market research. It is a bit of a gray area. Ideally, you should have a product ready to sell. And the key way to look at it is, if somebody had to put an order on you today, would you be able to supply it? So it's no good saying, okay, I've got this idea. You may have a product ready in 12 months, probably not going to fly. Ideally, you should have version 1 of your product ready to sell. May not be have all the bells and whistles, but that would be a good way to prove to Australia that you are able to provide the product that they're selling. No, Patrick, you can do both. So the R&D is at the start of the whole process, where you might be doing research and development. As I said, you need to have a product ready to go ahead and sell. So if you are still purely in an R&D phase with nothing tangible to sell, you may have IP, you may be able to license the IP. That's probably the only exception. But if you don't have a product ready to sell, you may need to wait a little bit before you do the export grant. So I said earlier on, the first 2 applications, you don't have to have any revenue. You just have to have the capacity to sell your product overseas. From the 3rd application, there's a formula that comes into play. And the grant that you get, you'll remember that I gave you the spend 305,000 less 5,000 at 50%. That is the one side of the equation. The other side is in year 3, 40% of export revenue received. You actually have to have a money received in the bank account for them to look at that. And then that percentage goes from 40 to 20 to 10, 7.5, 5. So what the government is saying, we'll help you in the first 2 years. You don't have to have any revenue. And then we want to see you have a hockey stick up to the right type of revenue growth to be eligible. Patrick, I might need to speak to you separately about your question on that one, just to understand exactly what you're doing. As part of this, you'll get a copy of the slides, but this sort of puts it into a formula or a spreadsheet where you can see the how you're spending the money and what you're going to get back at the end of the day. So you can see that spending 125,000 in the first couple of years, you'll get 60,000. But in years 7 and 8, there is a requirement for you to have revenue received. And even though you might be getting $400,000, it's looked at 5% of that, so you're only going to get a grant of 20,000, even though in your mind you may be expecting to get a grant of 60,000.
Quick question with that formula, Erik. With the revenue received, does that specifically relate to export revenue? No, yes. It's not total revenue.
No, that's got to be export revenue. And typically, I mean, Meryl, you would have seen this, but I still find there's some clients who in their putting this their financials together, they will put assume that all revenue has got a 10% component, the GST component of it, and then we've got to sometimes go back to the original Stripe work and see which one's got GST and what doesn't have GST, and it can be quite a messy exercise sometimes to try and work out what is the export revenue. So just something to bear in mind.
Actually, that's a good point. We've had similar situations where people are selling overseas, but the GST treatment actually hasn't been considered. So there's some money to be, GST has been over-reported.
Yeah. So now we come to the stage where we've lodged an application. Austrade will do a random spot check on the expenses to see that they are genuine. Something that Austrade is looking at very closely now is agreements with overseas representatives and marketing consultants. So if you have got an arrangement where you are paying somebody on a regular basis overseas, make sure that there's something in writing just that sets out what the fee structure is going to be and what their responsibilities are. And ideally, they should be giving you some sort of reporting on what they're doing. It's difficult to say what the ideal situation on that is, but Austrade is going to be paying out money. They want to see something that there is work being done. With marketing trips, Austrade does ask for a trip report or a diary of who you met, what you did, just to make some sort of determination on whether you, in fact, were working or whether you was maybe just going on a holiday. And then they will also ask for copies of invoices or bank statements, credit card statements, just to verify that the amounts have been paid. And that is it. Meryl?
Fantastic. Thanks, Erik. And I'm going to recap a little bit on the last point that you made. And I can see here that we've got a question from Luke as well. So I'm just going to bring up my slides again. But the point that I wanted to raise was that in my experience, Australia's been quite thorough in the way that they have looked and asked for more supporting documentation. I've had someone come out to our office and sit with me with the Xero file and invoices. And so my tip there, which doesn't necessarily just relate to this grad, but good record keeping generally, is to keep, if you're using Xero or whatever accounting software it is, make sure you've got a good process around attaching receipts and keeping all of your records. It really helps with accounting, but also with applications like this, rather than having to, after the fact, go and hunt for documents and potentially, if you can't find them, miss out on components of the grant money that you might otherwise be eligible for. So we've got a question here from Luke. Erik, can you see that one?
Yes. So Luke, yes, you can claim employees. They can be seconded overseas. Typically, they should be for longer than 12 months. If you're getting somebody who's based overseas already, so not an Australian resident or an employee necessarily, that period can be a bit more flexible. But if it's somebody going from Australia, the cost of sending him overseas, so relocation expenses and that, the cost of putting them up in a flat, apartment, an office, all of those costs can be claimed under the overseas representative.
Great. And now a question for the audience. Interested to hear what's been the most valuable component of this for you. So do you think that you might be eligible? If you're not sure, then make sure to ask Erik a question either now or follow up with him afterwards about whether your business is going to be eligible for the grant. And then also, if you've got any particular questions about components of the categories like the trade shows or oversee the marketing consultants. But love to hear in the chat what's been the most valuable component of this presentation for you. And I can see Luke has another.
Yes, so Luke, yes, the cost of putting all of those animation voiceovers can be claimed. If it's used for both Australia, New Zealand, and the rest of the world, there may need to be an apportionment of that. But typically, a lot of my clients who use exactly what you're saying, the animation voiceovers, typically they would be putting the voiceover with an American accent if they're targeting the US, or English in the UK, or Chinese into China. So typically then we would claim 100%, but if it's just a generic voiceover that's used all over the world, we'll need to have some sort of apportionment of those expenses.
We've got a question from Ab, which is, how do you classify the EMDG in your accounts? And then also, I think the question is when preparing tax returns. So I think it's asking, do you get taxed on
Yes.
the grant?
So it's a reimbursement. So when you get the money from Austrade, it does go in as income, and you do end up paying tax on that amount that you receive from Austrade. See, there's another question from Andrew. Is there a national cap on the amount the government spends on EMDG? The last year with COVID, Austrade put in a total extra money to bring up the total to about just over $200 million. This year, we'll still wait and see what whether they're going to top it up. But at the moment, there's about $160 million in the budget. It doesn't max out. So what happens in this current application process, you get the first $100,000 back. So if you get the maximum of 150, you'll get immediately after the review, you'd get back $100,000. The balance of the 50,000 will be looked at in the last week in June next year, June 2021, and Austrade will make a determination how much money is available, is left over in the kitty, and then make a pro rata payment to the people who are in between, expecting something between 100,000 and 150,000.
Great. So we've got some great comments in the chat here that people have found the content valuable. Actually, another question that's come in. Victoria's asked.
Yes. The answer is yes, Victoria. You'll be able to claim that.
Yeah.
Obviously, the Facebook marketing is that component that excludes Australia and New Zealand. So even if they might be in the UK, they may be doing marketing for you into Australia. We can't claim that portion. We can only claim the portion that is outside of Australia and New Zealand.
All right, well, we're coming up to time. So thank you so much, Erik, for coming on this morning and sharing your knowledge. And also for everyone in the audience participating, the questions, I think, add an extra dimension, and probably some questions other people are thinking as well. So I appreciate you taking the time out of your day to come along and also to interact in the webinar. So as I mentioned, we have a bonus for everyone that's joined in with the webinar. It's an export marketing development grant guide, and you can head over to grantcentral.com.au and access that PDF guide. And we'll also be sharing a copy of the recording. You'll have an email that comes out after this, and we'll share Erik's contact details in there so that if you've got further follow-up questions, I know, Patrick, you might want to have more of a conversation with Erik, then you can reach out to him. And we've been working with Erik, not just for our clients, but also with the Beanages Export Grant. And so I wanted to just add my recommendation there that I think that you'll get a great experience. We've actually covered questions. Oh, we've got a recommendation from Luke as well that can vouch for Erik. Great service. So great to hear. Thanks for that, Luke. Wonderful. All right, well, I'm going to stop the broadcast now and we'll wrap up there. Thanks again, everyone, for joining, and thank you, Erik.
Thanks, Beryl.